Hello everyone, and welcome back. I am Suresh Periyasamy. Today we are moving from theory to practice. We are going to look at 5 specific, real-world scenarios across different industries to see how IAS 16 is applied on the ground. Many students learn the rules, but successful professionals understand the business logic behind the rules. Today we will explore why the standard requires what it requires and how it impacts financial reporting.
Let's start with the airline industry. Imagine Air Global buys a jet for $100 million. The accounting rule here is componentization. We split the asset into the fuselage, the engines, and the interior. If we depreciated the whole plane over 20 years, our annual expense would be smooth. But in year 5, when we have to replace the engines, we would still have the old engines on our books at 75% of their value. We would have to take a massive, sudden loss on disposal in the P&L. This creates volatility. Investors hate surprises. By componentizing, we accelerate the depreciation of the engines to match their 5-year life. This ensures our profit margins are accurate every year, and we avoid a massive earnings shock in year 5. Next, the mining sector. Gold Rock Corp has a legal obligation to clean up the site in 10 years. IAS 16 requires us to calculate the present value of that future cleanup bill and add it to the asset cost on day 1. If we didn't do this, the mine would look incredibly profitable in years 1 through 9, and then in year 10 it would look like a disaster due to the cleanup costs. By capitalizing this up front and depreciating it, we spread the cost of cleanup over the life of the mine. This prevents the company from paying out dividends from "fake profits" in the early years that should have been set aside for restoration. Now, let's look at manufacturing and the critical 2022 amendment. Auto Parts Limited is testing a new line. They sell the test scrap for $5,000. Under the new rule, we record that $5,000 as revenue and the cost to make it as cost of goods sold. We do not reduce the price of the machine. In the past, management could hide inefficient ramp-up phases. If they had high wastage and low yields during testing, they could bury those losses in the balance sheet as capital expenditure. The new rule forces those inefficiencies into the income statement. It forces management to be honest about the cost of getting the factory up and running. In the shipping industry, Ocean Lines has to dry dock their ship every 5 years for a $2 million inspection. We capitalize this inspection as a separate component and depreciate it over 5 years. A major inspection isn't really a repair. It's a license to operate for the next 5 years. It is an economic resource that we consume over time. If we expensed it all at once, our profits would look great for 4 years and then crash in year 5. By capitalizing it, we match the cost of the inspection against the 5 years of revenue that the inspection allows us to generate. Finally, the chemical sector. Chemco installs $1 million worth of air scrubbers. These don't produce a single dollar of revenue. IAS 16 allows us to capitalize them because they are necessary for the rest of the factory to operate legally. This reflects the reality that environmental compliance is a cost of doing business, just like the machine itself. However, the critical business check here is impairment. Because this asset doesn't generate cash, we have to look at the whole factory and ask, is this factory profitable enough to support this non-earning asset? It forces a rigorous check on the viability of the entire operation. To summarize, applying IAS 16 correctly isn't just about compliance, it's about economic reality. Substance over form. Component accounting ensures our depreciation rates match the physical reality of the machine parts. Matching principle. We match the cost of restoration and inspections to the years we earn revenue. Transparency. We stop hiding startup losses in the balance sheet. This protects the quality of earnings and gives investors confidence in the numbers. Thank you for watching these real-world examples. If you are studying for your CPA exams or need professional guidance on complex accounting standards, I offer personalized one-on-one tutoring. I am Suresh Periyasamy, and you can contact me directly via the link on screen. I look forward to helping you master these concepts.